Welcome to my channel, everyone from any part of the world you're watching from. This is top-down analysis on gold. Um, just over this period, I discovered that on the YouTube space, there are few persons that just talk about gold due to the current market situation. So this is the reason why I choose to bring forth this analysis, this called the top-down analysis on gold, just to analyze gold and to give you my own perspective and how I'm looking at the market and how I'm looking forward to take the trades on gold as it is approaching. So without much being said, let's dive into the analysis, top-down analysis. First of all, when talking about top-down analysis, it simply means starting from the higher time frame to analyze the market down to the lower time frame to take your entry. And personally, the higher time frame where I start analyzing the markets from is the monthly time frame. The monthly time frame, to me, I would say the monthly time frame is a Google map. It enable you see the overall view of the market and to understand the next move, and you can pre-anticipate the next move of the market starting from the higher time frame, then moving down to the lower time frame. I don't want the video to be that long much, so what I'm going to do, I'll just go straight to the monthly time frame and start analyzing the market quickly. So let's go now. Okay, now we are on the monthly time frame. Before I proceed, I just wanted to do one thing for me. Just help me like the video, subscribe to the channel, and share the video. And also, I want you to comment on the comment section below if you love the video, and also let me know what is your take on it, and also if the analysis makes you money, just don't fail to comment on the comment section so that I'll be motivated to do this kind of video much more. I have them on the chart already. You can see that I have my zone markup, and my zones have been marked up already. And from here on the monthly time frame, we can spot this double top. The market came to the 20,000 per ounce, drops to 17,000 per ounce, then rally up all the way back to 20,000 or 20,000 plus. Then the market from there, that signifies a double top, and this double top is a reversal pattern, and this double top also occur on a very higher time frame, which signifies that the market has failed to create a higher high and a higher low, which is a criteria for an uptrend. Then currently the market has pulled back to the neckline, and the last month candle has break the neckline over here, and it has also closed below the neckline. And today, as I'm recording the video, today is the 3rd of October, and the market 3rd of October, just 3 days in the morning, the market just retraced back to test the neckline. Then now, what are we seeing then? What does that mean? And what does that tell us? That tells us that the market is definitely going to drop, and like how many pips the market is really going to drop. In subsequent video, I'm going to come back here and analyze the market and just to let us know how many pips the market will definitely drop. That is the overall pip. But from what I'm seeing here, I can tell you that gold, the overall pip drops for gold is about 3,000 pips, 2,000 to 3,000 pips drop. That is from 17,000 per ounce to, is it 14,000 per ounce that gold is going to drop. But for the purpose of this analysis, the market moves in waves. It's not just going to drop immediately like that. So for the purpose of this analysis is just to enable you know what the market is doing and to help you know um, what you are to expect from the market and where the market will definitely drops to before the overall pips drop. Then now quickly, after establishing this on the monthly time frame, we can move down to on the monthly time frame we can move down to the weekly time frame. And here on the weekly time frame also, we can see that gold has dropped all the way. What did gold do? We can see a characteristic of a downtrend here. We can see a characteristic of a downtrend. And what is the characteristic of a downtrend? Just the market forming higher high, a high, just the market forming a high, that is high. Here is the low, form again, this high, this low, this higher low, this lower low. The market form again, the market comes back higher, low, lower low, higher low, again, higher low, and lower low. Then currently the market is giving us a higher low to this level, and this level here we are expecting the market to turn away from here to give us either equal lows or a lower low, either equal lows or a lower low before the market retraces back. So with that being established, we see that the market is currently pulling back. The market was at 17. It was the market came to 1700 per ounce, go back to 1800 per ounce, then break 1700 per ounce and came to 1600 per ounce. Let me say 1610 or thereabout, and now is currently moving back to 1700 per ounce. Then now, what are we expecting from this market? We now scale down to the daily time frame. Then coming down to the daily time frame, on the daily time frame we can see this trend line. The trend line is coming. There is on the trend line, you can see we have first touch, we have second touch. There was a third touch here. There is a third touch here, which leads to the fall of the previous fall. Then the market is currently coming back for a fourth touch. And mind you, I think um, there is um, there is two trend line that is actually here, and one is the fourth touch and the second one is the third touch. If I draw it, if I draw the trend line, you will now see. So the market is currently coming back for a third touch for this, but I believe the market is going to touch this one um this one for the fourth time before dropping. Then now, with that being said, I remove it because I know what I'm expecting from the market. I will just join it so that you can see. Then now, from the monthly time frame, we have a sell bias. That is, the market is reversing, telling us that we are only to look for a sell market. On the weekly time frame, still the market is showing us that the market is in a downtrend by giving us a high, low, higher high, lower low, higher high. Um, yeah, is it higher low and lower low? You know the concept anyway. Then currently now, what are we expecting? We are we are only to consider right now. We are considering only from this region. From this region, we are considering only from this region what is happening. The price action that is taking place in this region. Then now, with that being said, if you go, we now bring out our feet. If we now bring out our feet, plot from plot our feet from here to here, from the high to low, you see that our eagle zone is at the trend line, is in between the trend line and is between the yellow line and the blue line, which is the 51% and the 61.80%, which I call it. That is the Hego zone. That is the ego zone, because it's only those with the ego high that can spot this kind of setup. And also, we are waiting for the market to come inside of here. We're waiting for the market to come inside of there before we start looking for our entering criteria to enter to take a sell. Um, that's all. That will enable us ride the market to the downside. Now, what are we having as conference? The trend line is telling us that the market will be selling from that point. The Fibonacci telling us the market also will be selling from that point, and the price action from the 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 daily, the monthly, the weekly is also telling us that is a downtrend. That's to say that we should only look for a sell opportunity. And also, if you look at that zone, there is a support. There is a support which was broken, and now the support has become a resistance. So there is a resistance zone just there. If I go to the daily, to the 4 hour time frame, as I'm going, you also see that. Then on the 4 hour time frame, on the 4 hour time frame, we notice that the market is currently falling, forming a wedge pattern. The market is currently flagging. So now, what are we expecting? What should we expect from the market? As I said, my purpose here is just to help you, um, show you what to anticipate and how you are to take the trade. Just, I believe, just wait for the market to do something like this. Do not enter, or do not enter. And I'm not saying you should enter if you see, listen, but to me, I will be waiting for the market to form either something like this. The market will come that touch the trend line and give me something like this. Then after this make, I'll look for a momentum candle, or I'll just bring out um, my entering criteria. This alone will meet my entering criteria, and I'm ready to rally the market down. And first level target will be here. First level target will be here. And this is what I'm expecting the market to do at this spot. And trust me, I'm only looking for a sell opportunity. If the market breaks the support and also break the trend line, I'm not interested in taking any trade. So I'm only interested if the market give me a sell confirmation. So with that much being said, that is just my little explanation and my expectation on gold.